there. I'm Mike Larson with Weiss Ratings here at the Orlando Money Show. And I'm here with Jack Ablin, CIO of Crescent Capital. Jack, how are you?
Thanks. Glad to be here.
Glad you could be here. Why don't you tell the people here a little bit about yourself, and then we'll get into some of the important messages you've been sharing.
Sure. So I helped start Crescent beginning of 2018, and it's been a phenomenal run. We went from 0 assets to 6.7 billion as of last month, and it's founded on the premise of goals-based investing.
Goals-based investing. You know, what is that? What is that phrase? What does that mean? What do investors need to understand there?
What it means is, when I started my career in the early 80s, just about every company that had a defined benefit pension program dumped all of that responsibility on their employees with these defined contribution 401ks.
Yep.
And it sort of let loose a whole generation of individual investors. Some were better than others. Most are probably not that good at it, and so they tend to shoot themselves in the foot. What goals-based investing does is essentially says, tell me what it is that we need to deliver. If we believe that your portfolio is an ATM that needs to kick out cash flow from now for the next 40 years, we structure a portfolio to do just that. So you have to worry less about how the sausage is made and more just here are the cash flows. And we can do it with a lot of certainty around those cash flows.
What do you find that the investors you deal with is most on their minds these days? I mean, are they generally looking for the income? Are they generally optimistic about where markets are going? I mean, what are some of the things some of the feedback that you get?
Sure. I think most of our investors certainly have enjoyed the benefits of the stock market and the bond market, for that matter, and they realize that many of the opportunities seem to be stretched. You know, a lot of investors are looking at large cap growth. A lot of investors have pounded down the bond market. Where are the opportunities maybe outside those traditional ways of investing? So one of the things we do is we buy direct investments in private equity. We'll go buy buildings. On the income side, I buy music royalties, life insurance settlements, litigation finance. So we're doing a lot of interesting, clever ways of generating income without necessarily just buying, the ETF.
Sure, I understand. Any mistakes that you're concerned about that you see people making in this environment that, again, your viewers would be well to pay attention to?
Sure. No, it's a great question. I think there's certainly a fair bit of complacency. One is really just matching the time horizon with each investment that you have. I don't care how much I like Apple stock. I'm not going to put the money that I need to make my tax payment on April 15th in Apple stock, not knowing what's going to happen between now and then.
Sure.
So it's really just a matter of matching the time horizon with the investments that you have. You shouldn't hold a stock unless you're willing to stick with it for 7 to 10 years.
Great advice. We're going to talk a little bit more about politics and the Fed and how that plays in our next video. But in the meantime, if anybody's watching this, where can they go for more information from you and from your firm?
Probably the best thing to do is go to crescent.com. If you're interested in receiving our research, there is a tab there where you can fill out your name and email address, and we'll send you our ongoing research.
Great. Crescent.com. Jack, thanks very much for your time.
Thanks, man.
Thank you, everyone.